Hello, everybody, and welcome to
Still
another
doing this?
episode of the greatest 401k show.
It's actually
in history.
appropriate for
I said to
today.
I like
myself,
it.
Wow, what a great show. The host, J.D. Carlson, is an amazing guy. So wonderful. Then there's Silent J, Justin McNeil. What a wonderful guy. Really incredible. If you like spreadsheets, they got this guy, Nerdy Chad, and he is always bringing nuggets. Such amazing nuggets. And as always, everybody's favorite Retireholic robe guy. So great. So sit back and enjoy, as this is Retireholics.
Welcome, everyone. Thanks for tuning in. Mr. Trump was incorrect. There is no road guide today. He's taking the day off for a industry, or I shouldn't say industry-related, work-related golf event. You know, it's pulling it. There we go.
Wait, should I go get my robe?
Probably should, Hack.
Yep.
So he's pulling a Devin Wendell. Quick housekeeping right now. We're doing something new tonight, everyone. Okay? And pay close attention, Mr. Hackler, because you're going to have to pull double duty here. Brandon, our producer, has been working tirelessly at some tech. And we are, you may have noticed, in 2026, we have not been playing Chatbar Champion. And that was by design. We were trying to come out with a new version. You know, we don't like the old stale stuff. And Brandon has cracked that nut. That's a weird analogy. You now, in the chat bar, I'm kind of just doing this off the cuff here, can vote for your chat bar champion throughout the entire show, and they will accumulate points, and we will watch those points accumulate on a leaderboard. I believe Brandon can kill me if I'm going somewhere wrong here. And even, you know how when we acrosyn and a little graphic pops up? I believe when someone votes for someone in the chat bar for chat bar champion for a point, a little point will pop up with their name on it or something, maybe. But there's a leaderboard there. Okay, so how to do this? And bear with us. This is the first attempt on this. We will evolve this. And I know you always hear this kind of crap from me, but it's true. Brandon and I have been meeting a lot. Get ready for a lot of new kind of fun, interrelated tech stuff in these Thursday night shows. How will you vote for someone? And remember, it's an accumulation of points. In the chat bar, you will type CBC space their name. So if it's Shannon, you could type Shannon. What I just said, the chat bar champion initialism. I don't want to drink that vodka again. That was kind of nasty. Okay, slow down, people. Fucking A. God damn it.
Do you have to type their whole name or just?
Brandon tells me you pretty much could just type their first name or whatever. Just be careful. Like
Shannon's the only one that's gotten a vote, and she's the only one that has her name spelled correctly in there.
Hang on, Brandon probably has to refresh it or whatever. Calm your fucking roll there, Silent J.
So much fun.
Be careful if there's a Michael Webb and a Michael DeCenso, even though, you know what I mean? Even though, are they spelled the same? So then you'd want to add a last name. But that's my basic gist on it. Producer Brandon, did I do okay there? Were you listening?
Yeah, basically.
Well, yeah, okay. And Justin was ripping on your leaderboard that it wasn't updated. Do you have to like do something to update it from time to time, or?
What do you mean it's not updated?
We just see one vote for Shannon, but a bunch of people chimed in with votes because that's how the chat bar is.
Well, if they're not using the person's actual name, they're not gonna show up.
Okay. Well,
so if you say Hackler and Hackler right now is Justin's sister, he's not gonna get a point for Hackler.
Okay, we'll see.
His username is Justin's sister right now.
I am so worried about seeing Justin's sister just through this.
We'll see if it works. Brandon will check back in. But let's get on to things besides games.
It's gonna be awesome.
Justin, can you please intro our guest, who I believe is here for his third appearance on the show?
Third appearance. All right. I had it at second. All right. But Today's guest is back for a second appearance. It's less than a year, and it's no wonder why. Y'all loved the hell out of him and his drinking sidekick last time. If you missed that episode, pause this one, go back and watch that one. Carl, we're doing things a little bit different with the intros now. Instead, I'm going to ask you some questions that you need to rapid fire respond to, like 1 to 3 words max. You ready?
Yes.
All right. Who's the better attorney, Fred Reich or crazy Carl Engstrom?
Carl Engstrom.
Perfect. Small
Damn
talk
straight.
or deep, get to know you, walk on the beach kind of conversations?
Neither.
Look at him.
I fucking like it.
Who is your biggest guilty pleasure musician?
Ben Folds. Sometimes with the 5.
Consider
That's
him
not
a
one word.
guilty.
Yeah.
Well, I mean, he got canceled.
I
I don't know. That's so it's but I can't
Oh,
let
did
it
he?
go.
Is he a child molester or something? I did not hear of this.
Yeah,
Never
I
mind.
think he
Move
just.
on.
I think he's just kind of a shitty to his
Eclectic
significant
dude.
others.
All right. You got any kids?
1.
Oh, shit. I was going to ask which one's your favorite. That doesn't work here. So
Mhm.
moving on a scale of
It
1 to
might work.
10, how hot is, just kidding, Nate, we'll give your sister a break this week. Back with his no bullshit, speak his mind attitude and his new and improved drinking buddy, ladies and gents, co-founder of Instromly, Mr. Carl Engstrom.
Thanks so much for having me.
All right, Brandon, let's do some fucking headlines. Let's go. I just went straight to Mezro.com, people. And I'm reading the headline, Mezro to acquire Leaf House Financial Advisors, a division of Leaf House Financial Group. This is important. Expanding Mezro's fiduciary solutions platform. Well, you know how connected I am in this industry. When a big multi-million-dollar deal goes down like this, what do? I call my Texas buddy, Todd Kading, the founder of Leaf House, and I had a little chat with him. I was sitting at my Texas ranch. He was at his fancy lake house or something like that. And we just chatted it up. And I asked him all about this. So I'm giving you some firsthand knowledge here. He seemed very chill, wasn't like super celebratory or anything like that. He was very clear with me that they have sold off Leaf House Financial Advisors, which to me means the 338 fiduciary services. Okay. And that's kind of what I thought of as what Leaf House was. But I was so wrong. And Todd Kading let me know how wrong I was. They do much more than just 338 fiduciary services. They've been working very hard on what he called the technology side. And so he's keeping the technology side and selling off the 338 fiduciary services side. And I was like, okay, tell me more about the technology side. And he says, well, he went on and on and on, by the way. I had to remind him, I was trying to get him to show up on the show. He had agreed to show up on the show. And at the time when he was telling me all about the technology side, I said, hey, you're really going to have to like tone this down for the show. This is way too long. He went on for 30 minutes explaining to me all the technology they do. He couldn't show up. He's either scared of us. Mezro
Had too many
called him,
margaritas, too many
told him not
todaritas.
to, because he gave me some excuse on text of his child's like performance, like something no one could be upset with, like some school performance or something. I'm sure it's true. See, he's a great guy. What's on the tech side? They have some force out technology. So for force outs for smaller accounts, HSA stuff, I believe he was super focused on collective investment trusts. And he made some analogy to me about our industry going from proprietary funds way back in the day with just a few investment options to like a multi-manager approach that we were also familiar with in the late 90s and early 2000s, and that he was going to bring that to collective investment trust, the Leaf House technology, and working through record keepers. I thought that was really interesting. He mentioned the other company with an M many times, referring to Morningstar. He's clearly competitive with them. And he was talking about coming out with, or they already have the ability to create their own fund sheets that would compete with these Morningstar fund sheets. And he can offer them to record keepers at a far more affordable price and have some elevated technology to that and make them better because they've all kind of been the same for a long time. So anyways, that's the summary. Todd Keating has cashed out big. I did not ask him what color Lambo he was buying, but he has cashed out big and he's going to either take a lot of that money and buy another lake house, or he's going to put it back into Leaf House, the technology side. He sounds very inspired to me. Doesn't sound like he's kicking up his shoes and taking a break anytime soon. And we might hear of him continuing to do phenomenal things on the technology side. So that was pretty much an ass-kissing review of someone who canceled on me. But anyway, that was my honest take on it. You look perplexed, Chad.
Well, I'm trying to follow the technology side and why the interest came only for the 338 services, because it sounds like the future revenue is deeper in the tech side.
Well, I'll tell you, he kind of told me that. He was looking for money. So he was out there looking for money, and he had gotten a lot of advice from people about private equity that he was not interested in doing that. A lot of people felt like that was not a good path to go down. They'd been burned by it. And in his search for money, that's where this deal with Mezro came. So that's a great way to summarize this.
Okay.
I believe, hopefully I'm representing this properly, that he now is going to get this money to invest in the technology. I was kidding about the extra lake house. To really invest in the technology and this new kind of direction for the company. Where is he getting that money? By selling off the 338, which,
okay,
mistakenly is what I thought Leaf House was all about in the past, but not true.
That is where I see them. There were a couple questions to ask, like, anybody else see them in the technology side of things? I don't. I've only seen them in the 338 side.
Same.
A Chatbar Champion leaderboard has come up. I can't believe that's accurate. Maybe it is. Maybe it's okay. Let's move on. What are your thoughts, Carl, on Leaf House and Todd Keating? Just kidding. I know you don't even know it. So we're going to go to the next one here.
Appreciate it.
Where are my notes? Oh, QuickBooks and Vestwell. So QuickBooks has partnered with Aaron Schumann and Vestwell. We can be quick with this one, but I feel like QuickBooks in this situation is this is going to sound sexist, so I apologize. It could go either sex, either way. It's like a bad girl that's been dating and cheated on a lot of boyfriends in the past, or vice versa. Does that make sense to anyone listening in? I feel like QuickBooks has always tried to find partners to do this. We had Chad Parks, the founder of Ubiquity, which once was an online 401k, on this very show one night, drinking with us, talking about what a nightmare it was to try to do the record keeping for QuickBooks. They've had other little intermediary partners they've had to. So good luck, Aaron Schum. You're dating this chick that's been fucking people over for the last 15 years. We'll see how this works out. Am I being weird? Carl, what do you know about this, if anything?
I only know this not as a lawyer, but as a business owner, that there's a tremendous potential in general for to segue I use QuickBooks to the retirement planning thing. We were doing payroll through Gusto, and so we ended up with
Guideline,
right?
Which ended up coincidentally Vestwell.
Right. So it makes sense. It also makes sense why they keep getting burned, in that it's ultimately kind of an awkward pairing as well. But you see a lot. I mean, ADP has been going super aggressively. But they're called.
You're welcome, Hack.
But they're called that. I hate it when people say that.
Static data processing, for example, has their own plan that has 500 different companies within it. So it kind of makes sense. I mean, that's Intuit, right? So they're basically just a rent-seeking company, because really our taxes should be done automatically. right? So I don't know. Makes sense
I
that
mean,
they would try to squeeze a
here's-
little more.
Go ahead, Jen.
From a business building standpoint, some of their bigger competitors from a emerging tech payroll system software type business were just bought by or acquired a 401k record keeping system in Gusto and Guideline. We saw Paylocity launched a 401k record keeping partnership with Vestwell.
Can I
And
ask
now
you though,
it's-
Chad? Chad, can I ask you about that? Do you really see QuickBooks as the equivalent of those companies you just mentioned? Because I see them as an accounting system first, and then a
For sure.
payroll system next. But am I out of the loop here? Is that what does Gusto do? A shit ton of accounting?
No. I'm talking specific to the 401k space, JD. Think about all of the businesses that we onboard. I mean, you looked at the statistics. How many of our existing clients are using QuickBooks?
Yeah, a lot.
A
'Cause it's
fucking lot.
Very
a ton.
popular among small business owners. Yeah,
It is, and that's a nature of a third-party administrator's
we
business. So
we use QuickBooks at Plan Design Consultants.
So while you see them as a bookkeeping technology, I see them as a payroll provider
Oh,
because
no,
that's
no,
where we run into them
I
constantly.
use them as payroll too, and so I want to be clear about that. I just want to make that distinction. They're also
This
a lot of
is-
people see them as accounting first.
This is a natural progression for them right now because they're losing business to the likes of Gusto and other tech emerging companies, and they have the stranglehold on the books, the accounting software size for these small groups. But what they don't want to do is lose the relationship as a whole because they suck on the payroll side and have no integrations with these different record keepers. So why not create something with Vestwell and launch it out to, I have to imagine they've got probably more than 100, 150,000 small business clients for payroll
They're huge.
services.
I'll bet you it's way more than that.
Yeah. So this is natural progression for them. And to Carl's point, another way to make a fucking dollar.
But Chad, it's not progression. They've been trying to do this for 17
No, they
years.
have not. They have not partnered to build what they're calling an in-ecosystem retirement program.
That was the
They've
concept
played
with
friendly
Chad
and
Parks.
sharing data.
No. That was the concept with Chad Parks. I mean, obviously QuickBooks has always fell flat on its face in terms of its ability to integrate with things and do well, at least in our space. But Chad Parks was the fucking QuickBooks 401k plan, man. Like,
See, my understanding with that though, and in our time we had Chad Parks on here was I'm gonna take my outside program and I'm gonna find a way to snap it all into what you're doing. Almost like a payroll integrations and others.
So you're just
Vestwell's
suggesting
building
that-
inside the ecosystem, is my
Is it like-
understanding.
Yeah, is that what the press highlight says, or is that what is actually happening? You don't think this is just Vestwell being Vestwell and partnering? You think they're doing all kinds of customization? See,
Yep.
I think this is I'm in no offense, and Aaron Shum can smack me down or private message me and let me know, but Vestwell already does great work trying to integrate with payroll systems, and they already integrate with QuickBooks. I just feel like this is just a more formal fucking relationship here with that. I don't know how much more details happening here, but whatever. I'm being a negative person here, but I just want to see. I feel like QuickBooks has never had a successful relationship, and so we'll see if
I want to know if it's going to be unbundled or Vestwell record keeping admin only.
Okay,
Same question for Paylocity's build out.
Hey, how about this? Fuck you and TPAs. I'll drink. I think I owe one as well. What about advisors? Where do advisors play a role in the QuickBooks Vestwell partnership?
Vestwell's been pretty advisor friendly all along, so I have to imagine that this platform is still fully open and pushed via that avenue.
All right, let's check back in on it, because I think they can be advisor friendly and at the same time work on other things like all these state-run plans and individual retirement accounts and this type of partnership stuff.
Maybe Vestwell can finally get QuickBooks to, calculate the match on Roth contributions, because we're in fucking 2026 and they still can't do that.
Hey, with all my shit talking, we'll move our plan to Vestwell if we can get it to work well with QuickBooks. We can't be all ready to a game, shall we? Okay, how far are we in here? Not too bad. All right, let's go quick. Let's go with a fucking little quick game. Carl, I don't know if you know this, but a while ago, I'm a very creative guy, and I was sitting around. I was trying to think of a game for the show, and I came up with a totally original Nope or Dope game. So you're gonna love it.
Is this the first time we've had this all year? Or am I crazy?
No,
It's been
you're
so
crazy.
long.
Do I have time to Shazam the intro music?
Maybe.
I know what it is if you want it all.
Nah,
It's up
that's
to you.
Carl, this is where I give you some kind of pop culture kind of thing, and you let me know whether you're yay for it or nay for it,
okay.
dope or nope, and then you tell us why. I learned this on social media. Never heard of this. Very apropos for the show. It's called a Coors Medium. You know this? You take half of a Coors banquet beer and half of a Coors Light, and you mix those babies together, and it's it's going viral on the internet. A Coors Medium. Are you nope or dope on this, Carl? The guy who doesn't drink.
Yeah.
If you
Right,
were
I mean,
if you were a raging alcoholic and you loved Coors, would you be into a Coors Medium?
I say dope. I mean, granted, it's been 14 years, but like
I'm sorry to hear that, Carl.
I am too. Like, I mean, I wish I could drink
congrats
responsibly,
on
like they say
14
in the
years.
ads. But there's such a wide disparity between, like I know that something like Budweiser or Coors would be the standard, but if you get used to drinking light beer, it's very heavy. At the same time, there is something about a beer that has some kind of substance to it. So I kind of like it. Like it kind of makes sense that there's something in the middle.
Chad, have you ever been to the bars where they literally like mixology different beers, like
Yeah.
craft beers and stuff? So why not
Yes.
Coors?
I'm down.
Called a
I'd give it a day in court.
Okay.
I wouldn't call the banquet beer heavy though. I feel like those two are fairly similar. One's a Pilsner, one's lighter, is the way I would describe them in terms of flavor.
Go back to everyone. Go back to Retireholics episode I don't know 7, 8, or 9, and Chad has a Coors Light 12-pack carton on his head. No, and we're doing beer taste testing, and he goes like 0 for 6. So don't listen to him when he thinks he knows what beer tastes like. Justin, are you going to run out this
Fuck
weekend
no.
and try to make your own Coors Medium?
No, just choose a beer. Like, what are you drinking the medium for? Either fucking get all the way in with it with the regular banquet or not. Keep drinking your light beer.
You just want to save that extra 15 calories or whatever you did.
Yeah, seriously. Jesus.
Okay, no or dope, Carl. Have you seen these? I'm seeing a lot more of these. You remember when we got AI and you could create your own graphics? And I think Shannon S. Words is here in the audience, and I saw like a cool superwoman thing of hers that she got at a conference where they turned her into this AI superwoman, kind of cartoony. But now, and then there was the one where everyone sat in like the toy package where they had the things they use. Like, I'm Nerdy Chad, I have a calculator and this, and you're like this package toy the AI made for you, generated. Now I'm seeing like legitimate content on LinkedIn. Like it's not a fun thing. They're posting about something and then they're having an image of them that's AI generated in the theme of what they're talking about. And I don't want to, what do they say when you move the jury or you whatever? I don't want to lead the witness. I don't want to lead the witness.
Sway the audience.
So what's your thought on this kind of AI generated imagery, especially with yourself in it in the work world? Oh, Jesus.
I mean,
Yeah, bring them
Hit
up
the
4
buttons.
times, Brandon.
I'm a 95% nope. And I would just say that doing AI related imagery on LinkedIn or to be artificial intelligence
Go hack, go.
almost certainly
Carl,
going to end up
what are you
being
doing?
cringe and either semi or maximally embarrassing in as little as a year or two. Just think of like if I could find
Yes.
an ice bucket challenge that your boss did, right? Like that's embarrassing. I feel the same way about AI. I'd also like to say that somehow it came across my desk the actors from 80s or 90s shows sitting down on a bench with their older
Yeah.
self, and then the older
Oh.
self walks away. And I'm strongly opposed to that. I find it so incredibly creepy. It kind of freaked me out and probably lost me an hour and a half of sleep. So,
Dang.
as of
Great.
I mean, there are selective instances where artificial intelligence generated images and videos can be awesome, but by and large, nope.
I love, I think you're the first person to give a 95% nope. I don't think we've ever had that before, but I love where you're going. I'm picking up what you're putting down, and I'm going to tell you, I think it's already cringy in my opinion. Like I look at it, I'm like, what the fuck are you doing? I know what you did here, and it's dumb. Justin, do you feel any different?
Nope.
Okay, we'll move on. Nobody cares what Chad thinks about marketing stuff. I should last one. Oh, it's good that Justin's sisters. We're gonna ask Justin's sister about this one. Carl, I just did basically a 17-hour car ride with 2 dogs and my wife from Texas back to California. Yes, everyone. I was in the Pacific Ocean today and it felt really, really good. Although surfing is not like riding a bike, I'm gonna need a few days to kind of get my feet back under me. But along the way, we had to listen to a lot of music, my wife and I, and we had one major dispute along the way, and I didn't back down because when I hear the sweet sound of this artist, I got to turn it up and vibe on it, and I love it. So I'm not sure we've done this before, but nope or dope on the goddess, the queen, Taylor Swift and her music.
Oh, dope.
Thank you.
Yeah, I mean, look, there are a few. I mean, when you get played a lot, there's really no song that can survive a severe overplaying. But I mean, she has a catalog of like at least 10 to 15 just bangers. Like, I Knew You Were Trouble. I mean, if I had to do, I mean, just play his best songs of the 2010s, I mean, it would make a playlist of even 20, 25. Like,
This is who I expected for your guilty pleasure.
Did you?
Why would I feel guilty? She's the most popular artist in the world.
God bless you, Carl. So guilt.
So at the same time, like, I'm not, she can also be very cringe at times. I did not need her writing a song about Travis Kelce's Wood. But you know,
Yeah.
look, artists
I missed
are
that
supposed
one.
to take swings, and sometimes those are going to be misses. Like that's how you end up with. I mean, you kind of have to risk
Okay,
failure in order to make
I
art.
love that you referenced an actual song that you thought was a banger. 2, I love that you referenced the deep cut on the Travis Kelce song on the new album. Yeah, this is real shit. I'm gonna skip Justin and Chad and go straight to the Acrosin buddy. Are you nope or dope on Taylor Swift, Hackler?
I guess dope. I'm gonna have to go the
I
dope
mean, I
realm.
guess.
But I mean, you drove me for an hour, and that's all we listened to. So like, and actually, I think there was something going on too with did you play it in the cart too? So like, might have been 5 hours of Swifty we were listening to.
A lot of good music in that collection. And
Hey,
to
raise your
Chatbar-
hand if you've been to a Swifty concert, by the way, in this group. Yep, Hack, go ahead and raise that hand up.
Yeah, no.
You're the only one.
Yeah, I'm not allowed within
I'm more
100
shocked
yards.
to hear that Trace is like anti T Swift.
Oh, she fucking hates it. She's literally just like it comes up and I hear the groan from her, and I'm like, no, her groan is matching my excitement of like, I cannot wait. It's like it's livening me up. And a 17-hour drive is no joke, man. There's moments where you need something to lift you up. Okay, let's move on to the main event and the whole reason that Carl Engstrom is here. I'm actually going to let him kind of take over the steering wheel for a moment. But it's this whole new regulation on alternative investments and what is kind of bleeded out beyond alternative investments, dare I say.
Right.
So Carl kind of set us up, and then guys, Let's try to go deep on this one.
So I appreciate you having me on. I've been working a lot with various stakeholders and folks who care about retirement relating to this proposed regulation from the Department of Labor. Originally, you thought that it would just implement Trump's executive order and say it's cool to have private equity and hedge funds within your plan.
Those exact words would have been nice. That's the way I would have written it. It's cool, bro. You can do it.
Instead, it turned into let me rewrite the Employee Retirement Income Security Act. It's well, there's and yet I don't think anybody is talking about like the craziest part of it. In other words, everyone's like, oh, look, it talks about liquidity and it gives us more guidance on performance. And I see that and I think it is kind of crazy that the Department of Labor never offered a regulation explaining like how to look at investments. And so in some ways it's filling in a massive gap in terms of prior guidance, just by talking about how to look at fees.
Though, not something we had anticipated, right?
Right. Yeah. And so that was sort of out of nowhere. Now it turns out that secretly it's burying an agenda within the factors. But I think at first glance, it is kind of amazing that we didn't have content like this because the Department of Labor has historically been so incredibly adverse to talking about prudence and what it might mean, which is kind of nuts in its own right. But what it's really about is it's about ending ERISA litigation.
Yes.
By plaintiff lawyers.
Nate Moody has commented that Daniel Aronowitz's speech, who I always like to say was a almost guest on this show. He was about to be on this show and then had to back out. Scared the shit out of him. He's completely in Big Daddy's pocket, referring to Trump. But you're right. Daniel Aronowitz has been very clear that one of his big marching orders, or maybe his own, I don't know if it's own inspiration or the marching orders from the president, is to snuff out this litigation in this space. And so I can't wait to dig into Carl's brain a little more, but for some context, you're against that. That's your business. That's what you do, Carl. You don't like Daniel Aronowitz's agenda.
Yeah, I mean, and I understand he's in Big Daddy's pocket, but keep in mind he was Big Daddy. In other words, his former business was fiduciary liability insurance. He owned Euclid Fiduciary and then Encore Fiduciary. Yes. And by the way, speaking of cringe, naming after you sell your business and you start a new business in the same industry and call it Encore something is incredibly cringe because I've seen it literally in 12 different industries. But anyways, Encore Fiduciary, his second fiduciary liability insurance company. So he's been writing about this dating back to 2015, which is here are all the problems with the theories that plaintiffs' attorneys are advancing in these cases. And it started like, I am going to objectively talk and somewhat educate. And it just by 2018, it had turned batshit crazy. Now, I have somewhat mixed feelings because I have to say, I'm doing okay. I have a pretty nice house. I drove here in an Audi. I have, I'm not rich by any stretch, but I've done okay, largely thanks to Daniel Aronowitz. Like he has written checks for me that have gotten me paid and that have afforded me a lush lifestyle. So I am super grateful for that. But no, I mean he was brought in.
What if his new push is the end of you? What if you and Schlichter and everyone will no longer be able to make all these millions and drive your fancy Audis?
So, and to be more serious, the thing is, I can't fault the backlash and the criticism of plaintiffs' attorneys. I mean, I watched it happen in real time when COVID hit. All of a sudden, we were seeing new lawsuits filed every single week that were oh no, you can't use the Fidelity Freedom Funds, and then oh, you can't use BlackRock's target date funds,
right.
And they were and they would use just current year's performance data and say, oh, therefore it was imprudent. Like that isn't just hindsight bias. I mean, they were, it got, because some plaintiff lawyers have had success, a lot of meritless cases were filed, and there's still probably 5 to 10 plaintiffs firms that are filing relatively meritless cases. I hate it too.
I'm glad to hear you. I'm glad to hear you say that I always feel like when they're looking back at performance, I feel like, oh, come on. You're talking about mutual funds that have prudent asset allocation. They're doing like, you're looking back and you're cherry picking something that didn't do so well in a period. But let me get you back on track, because I think this is good. No, and I actually love how you set up all the good juicy shit. Like I like that. But let's get back to the actual regulation and its potential and how this could be bad for our industry. Not in the sense that, oh, it'll be bad for plaintiffs' attorneys, because there are some people who think that may not be true, that this might actually be great for y'all. And this will give you a lot more stuff to sink your teeth into when you're in these courtrooms and do stuff. So I'd like to focus on the regulation itself and how it's starting to talk about all these different areas. Fred Reich mentioned that it's talking now for the first time ever about how there's a responsibility around a prudent core menu. And we've always been focused on individual investments and not the collection of the entire core menu. I thought that was really interesting. But take us deeper into the actual what's happening.
So first of all, we didn't need the Department of Labor to tell us that performance was a thing, okay, or that liquidity is a thing. In other words, like those of us who kind of understand investments have always understood that you can make a case out of what are people doing retirement plans and what are the plans that are significantly deviating from that conduct, whether it's managed accounts, whether it's, you used an investment that did not fit within the overall risk profile of the plan. And so there's the fact that they wrote down some factors doesn't do anything for us. The key
for everyone listening in, for everybody listening, these are these 6 factors, right?
Six factors, right? Yeah. Performance, fees, liquidity, meaningful benchmark,
valuation,
and
complexity,
right?
Sorry,
I'm getting a weird reflection from the sun, so
it's okay. We love you. We love you in the sun.
Okay, great. So if I come across like a guy in a David Lynch movie, that's why. And the second part of it is, and then it says, consider these 6 factors and determine that they are satisfied by the investment you selected, then significant deference is given to that decision. And there is a presumption that you have acted prudently. So those are massive words.
Can I ask you a question?
Yeah.
And I'm not smart enough to understand this all, but there was the whole Chevron thing that was this big deal in the legal world, where we had to kind of accept like a professional's like assessment of something, and that people are tying this to this now, where they're saying that we're supposed to accept. I'm probably going to botch this, so I want your opinion on this, but we're supposed to kind of accept that fiduciaries are prudent in some manner, that their decision is they have the maximum responsibility and help me out with this.
They have maximum discretion. In populating the investment menu. And in terms of the Chevron thing, I'll be honest, like I didn't take admin law, so I get confused in this stuff. Like there is an irony in that they overturned, Chevron was overturned. It was a project by the Federalist Society and sort of the right wing at least within the lawyer world. It was a project of theirs for 30, 40 years. They finally overturned it. Then the Trump presidency started, and all of a sudden the regulations that they promulgated didn't have the force of law and wouldn't be deferred to as much. So there's a certain irony to that.
Yeah.
I don't know how that shakes down here. It is true, they said in there we get Skidmore deference, which is more like,
yes,
we sort of trust you, so this is reliable. So I don't know if this necessarily has the force of law. So I've been approaching it from the perspective of, I'm going to assume that it has the force of law, because that's really the easiest way, because let's just assume it goes into effect and whether it would work or not. So let's discuss its merits and whether it's consistent with the statute. I'm not going to worry about how much force it has. I'll worry about that in 2 years when I'm doing a brief as to whether or not the regulation has, should be followed. So, the word the word is safe harbor. That's wrong. Safe harbor legally means literally you're safe. This instead means you get a presumption. We're going to assume it's prudent unless the other side proves otherwise. This seems like not that big of a deal to lay people within laws. It is within the legal world. It is make or break. I mean,
can I give you an example that everyone would understand? Because I fell into this trap. Like, I naturally assumed that a qualified default investment alternative, like a target date fund, was like a safe harbor. Like the government told me that I can use a target date fund for a qualified default investment alternative, so I'm protected. But that's not true. Schlichter can sue me because he doesn't like which one I chose, right?
So there's two different types of protection, two different issues here. Now, let's say one of the participants in your plan doesn't pick an investment, ends up in a 2060 Vanguard target date fund, and it drops 20%. Before the qualified default investment alternative, that person could sue just saying like, I lost 20% in the investment you made me do. And that's why the default funds were tending to be money market funds or stable value funds.
Right before that, yeah.
But now the regulation says, okay, we will, if you don't make a choice and you end up in the qualified default investment alternative, legally, we will assume that you chose it. So
but the plan sponsor is not safe from choosing that.
Correct.
Yeah. And
you are
Chad,
still on the hook for.
Did you do this in your career? Because I did. I sat in front of clients and said, "Hey, if you choose this target date suite for your QDA, you're protected through QDAA laws." Like, and I was talking on my ass. That wasn't true.
It wasn't a sense in that no one was going in that your employees could not sue you because their account went down 20% in 2022 or 2007. So it was a certain level of protection, but not but you weren't safe in terms of your job in designing a menu.
But was there a whole lot of fiduciary risk in designing the menu versus designing the investments being chosen at that point?
Well, I would say it kind of depends on the level of sophistication and having where you are in the world. 25 years ago, or especially like 40 years ago, yeah, I mean, lawsuits about stocks and investments were like, oh, I lost money. Oh my God, you used something that lost 15%. I mean, that was the way that the investment world was looked at, just an incredibly simplistic view. Today, no. I mean, for folks who understand how retirement plans work, and I think there's a lot of education generally about, you're gonna have a couple bear markets every decade. You're right. But before Jerry Schlichter existed, the only risk that people thought existed was, the default you put me in lost me money, and I get to sue you because I didn't actually pick it. So it's at the time, it felt like a big deal. Now it's kind of obvious.
But I guess my general sense is in the past. Okay, go ahead, JD.
I kind of want to set you up, but I also want to mention that for years, Robe Guy would sit next to me on our shows, and he would always be laughing at something, or he'd always be reading the chat bar and laughing, and he would distract me because I thought like we had said something bad or whatever. And that's what Hackler is for me tonight. Hackler's focused on the chat bar. And he's laughing, and I'm like, whoa, did we say something wrong, or what's going on? And like, no, he's just reading the fucking chat bar. Okay, Chad, you're bringing up something that I don't know if Carl has focused on yet enough, and I think you want to go there, and you want to kind of pull on this string, the whole core menu thing. Mm-hmm. My understanding is that the government has never given us any guidance on this concept of a prudent core menu, like a well-diversified core menu. It's something that we just kind of invented and did on our own, and there was best practices, and obviously it makes a lot of sense, but they have never commented on it. And so, Chad, you're finding this interesting as well, the nerd in you, right? That They finally chimed in. And now we've got new expectations, it seems like.
Well, it seems like in the past, the expectations were you need to look at your process and prudence in individual investment selection. And we call the target date suite or risk tolerance suite an individual investment. But it was never looking at the overall structure of your core menu. And I feel like this executive order is doing that. It's calling into light the fact that you have to have, and it kind of connects our two topics, JD, an outsourced 338, like we were talking about with Tony or with Todd. You're looking at that going, can they truly operate under this new executive order and understanding the business and their structure and their needs from a truly prudent core menu and the offering that should be made.
That's an interesting concept. 338s don't look at, do they?
It's individual investment selection.
I love that. By the way, once again, my favorite guy out there, Nate Moody, is talking about in the old days, you had to like check those 3 boxes. That was what the government had told us. Now we've told ourselves we need to hit like the Morningstar 9 boxes, right? But the government never told us that. We just kind of made that up. And so my question, I think what you're hitting to chat, and I'll ask everyone in the chat room included, is are 338s looking at core menus in terms of their diversity, or are they just, as Chad just stated, just looking at each individual fund? Because I never even thought about that. Like, would your 338 approve your funds and then you literally are not diversified, like you're not giving your participants the choices they need? That would be really interesting. No, if I just had too many Guinnesses tonight. I feel like that.
You're not asking me, you're asking Carl, right?
So there's 2 levels of schism here. One is that, ironically,
I love that word, schism. I don't know what it means, but I want to use it. Hang on.
I gotta
look at my Gemini right now.
I know a bunch of Department of Labor attorneys. I think they're great, but the Department of Labor is run by attorneys, okay, not by people who know investments. They have forever thought, oh, the way that the statute is written is what's prudent is determined by investment practices. That's not necessarily for us to decide. So we're not going to weigh in on what's prudent. And whereas in the real world, you all are thinking like, what has the DOL told us about what is prudent? Yeah, I don't know.
Hackler's got to start drinking with you.
So it's 2 sides that each think the other one is supposed to do the talking. So that's why you've had this vacuum for 40 years about talking about menu design. That's, first of all, where everyone is waiting for the other to fill in the way this is all supposed to work. So in that way, it really is welcome. And in some ways, it's like the smartest, talk about wolf in sheep's clothing, more like wolf in like Prada. But the second schism is, you're right, Department of Labor has not talked, no one has actually said menu design is part of your fiduciary duties, but everything is your fiduciary duty if there's other investment professionals working on it. At the highest levels, like, I guess I would say I see it in especially $2 billion and up plans. I mean, they focus tons of time on menu design, and it is incredibly thoughtful. I mean, a lot of it is taking into account the behavioral.
Carl,
yeah.
I think even the small market actually these days gets that one pretty right. So I don't think it's a massive liability. I just think I'm with Nerdy Chad in that it's just interesting to hear the Department of Labor chime in on it for the first time. But I think we generally do pretty good with that.
Yeah. Okay. So, a lot of it gets, so here are the different tiers, and here's the 4th tier, the self-directed brokerage account, and what's going to be active, what's going to be passive. But yeah, you're right. I mean, for 20 years, people have been refining how menus are done, and it's about how participants interact with it. So there is a degree of sophistication and thoughtfulness that the Department of Labor just hasn't ever.
Okay, can I ask you, Carl? Then, so here's your classic core menu. Never really included alternative assets. I mean, the most risky stuff we would put into a core menu would be like specialty funds. And so you would use those hopefully to kind of supplement a more kind of prudent menu, and you have real estate or tech or emerging markets or whatever. So can I ask you, where do you stand on the whole alternative assets, the private credit, the private markets, all that kind of stuff? Because that's what this is supposed to be about. I know it's bleeding into all these other areas, but do you think that this is a good or a bad thing? And then specifically as a plaintiff's attorney, not regardless of how this regulation plays out, but were you licking your chops that, oh, Trump's gonna say thumbs up to fucking all these, private equity, private credit stuff? I can't. I just stare at just everyone else
Sorry.
like this
I'm
entire
so
show.
sorry.
I just
Moody
stare.
is
I stare
Moody
at
is
him.
on fire.
Is he? Is he lighting it up?
He said first time Justin's sisters ever complained about me being too long, and I just,
Oh God. We just lost our guest. I had a question for him.
fuck.
Chad, do you think he's pro or anti private equity, private credit in 401k?
That's a tough one. I'm thinking about it from Carl as a human being, and I'm thinking about it from Carl as a litigator. And I think Carl as a litigator is pro. I think Carl as a human being might be negative.
Oh, pro as in it'll make him some money, or
Yeah.
okay, yeah.
JD, Nate mentioned something in the chat bar, not to give him a ton of credit here, but we were talking about outsourced 338s and the fact that there is now oversight over the whole core menu, perhaps, with this order.
Mm-hmm.
And he
I
mentioned
knew
correlation.
you were gonna love that part of it.
I fucking do, because when you look at a typical 338, they're looking at the individual investment and they're running it through their methodology and they're saying it meets metrics. They're not looking at whether or not they have a bunch of underlying correlating assets or investments with other.
Well, now you're going even
in the
deeper.
menu.
Yeah, you're not just talking about, oh, did you check the 9 style boxes?
No.
But where's the correlation? That's great.
Where's the
That's
correlation between those investments? And I think when you look at perhaps an investment company that is a single fund family, and you have a lot of drinking the same Kool-Aid, you have a ton of correlation.
Whoa.
If you're an advisor.
News alert, Capital Group, American Funds, Chad's talking shit about you, and he does business with you all the time.
They now have an outside cap group, outside American Funds investment suite, even in their Record Keeper Direct.
Okay, but if I did a search of all American Funds plans out there, I'd find a lot of proprietary funds. Which is fine. Same's true of Fidelity. No, you're good. We're gonna play a game. Because Shannon asked.
Oh, I don't get to answer the question? Because I'm still licking my chops.
Okay. Well, let's not leave it. We'll do the extended show today.
Did I bring one
All
in?
right. I am very quickly, and I
Carl,
won't drone on.
no, please. I want you to drone on. We can keep going. We can make.
Oh, we can do the game first. I'm sorry.
No. We can make this Joe Rogan tonight if we want to. The game was played, and I don't have Smirnoff, everyone. I just drove fucking 17 hours to get here, but I did find this in the deal. Will this suffice? Is everyone okay with this?
Absolutely.
Yeah.
Justin's sister will not, but I apologize.
She's done.
Well, I can go grab another one. I want to do 4, but
I was going to say, he says 4 of them.
I'll do 2.
There's
That's
as much
fair.
alcohol in that as there is in this.
Carl, continue on your rant.
No.
My question to you was, are you pro or not on private credit, private equity in 401k?
So, I'm anti. I'm concerned about it on a number of different levels. One is, I think that performance reporting and the way that they calculate their own performance is a joke. Internal rate of return puts too much emphasis on initial returns. They don't count all the money you're not making when it sits in cash, and they just only start counting returns the moment they make the call for $10 million. I think they use a lot of leverage in order to artificially boost their returns. And I think, nothing I've seen makes the performance numbers of private equity reliable.
But Carl, in the 6-factor test, I don't see transparency as one of those. I'm just kidding.
But I would also say that to the extent the performance gains have been legitimate, I think that there's a huge issue, which is similar to what happened with hedge funds in the 90s, which is that I'm sorry, that's a bad analogy. What I've seen says, private companies were 2.7% of market cap. Now they're 3.7%. And so it's expanding. And I'm thinking, well, is that really publicly traded companies going private? Because I only know of Lifetime Fitness. I don't see it that often. I think it's instead valuations expanding. In fact, it even looks like valuations of private companies are often starting to rival or get close to those of publicly traded companies, which is bonkers. So like how
But
much of the good
that has
performance
a lot.
has been multiples expanding and them just buying stuff from themselves, right? Because
Yeah,
every
right.
5 to 7 years you have to close your fund, so you sell it to your new fund and you have a nice healthy profit and looks good. I think that there's way too much assets there. I don't think that there's enough alpha to it. But ultimately,
So Carl, you
yeah.
do then, you're in the camp that you think that they're struggling. They're playing their little fucking shell game, and 401k, the United States retirement system, looked like a great place for them to continue their shell game.
And their shell
Fuck
game
yeah.
needs new money. It needs new money, right? Because you have to be able to keep buying the companies for more and more. And so, of course, it is the crown jewel to be able to get into the American retirement system. And that's the ultimate tragedy of it, which is that like there's $8 trillion sitting in ERISA covered 401ks. If they get 1/4 of 1% of market share, given that they're 2 and 20 or whether with all their bonuses and compensation they pay themselves, you're looking at 4% fees probably, right? So if they just get 1/4 of 1%, that's $20 billion of wealth just transferring to the hedge fund billionaires or to the private equity billionaires.
Yeah.
Like I'm from a pure it is a massive distribution of wealth out of
It's
the
a
middle
follow the
classes
money.
pockets and into the wealthy's pockets. I can't stand it. So yeah, it makes me ill.
Yeah. Well, I got that wrong on this show. When it first came out, I got in a few fights with our guests saying that, hey, I kind of bought into the vibe of like, look, all the rich people invest in this private equity stuff, and I believe them that it was doing really well, and I was like, I kind of was into the whole concept of like, it'd be great if the average person can have access to this type of specialty asset class as well. And I've learned more and more, Carl, and a lot of very tenured people in my industry have reached out to me and broke it down for me and shown me that some of the things you just said, like the lack of transparency and the fact that they need money, is kind of a real indicator. Like, well, if they're doing so fucking great and if everything's so awesome, why are they on their hands and knees to get in here? And then the industry, I've seen this now, maybe I'm just hypersensitive to it, but news on Blue Owl Capital and all these, this industry is struggling. And so now it's all coming to light. So I apologize. I got that one wrong. I agree
I don't
with
think
you
you
right
need
now.
to apologize at all. Like I know people who have run private equity who have profited a great deal off private equity. Like we have an expert witness who was sitting next to Michael Milken at Dexter Burnham, and he bought out Steinway. Like private equity is kind of cool in concept in terms of and I've seen them really make incredible differences at companies. So it's not necessarily creepy as a concept. It's more along the lines of like all of the big gains we're taking companies that were relics and turning them around into profitable companies. Those opportunities are gone. It's just more along the lines of we're at the stage of this asset class where it's time to dump on the people who are not going to make the big money, because the extent the profitability has been there, I don't think those opportunities exist anymore. The plum opportunities. Now there's still like, we can come in and we can kill your pension plan and we can fire half of everybody. I mean, they still certainly have ways to boost growth. I just don't think that, I don't think it will work out well for folks, but your instinct, I don't think you have to apologize for it. I mean, I think it's sensible. It does make some sense, except I would say this. I think rich people are just as dumb as other investors, and I think that they're huge suckers. I think that they've fallen for the hedge fund thing, and I think they're falling for the thing now. I have yet to see anyone
Great
like, oh,
analogy.
I got rich from private equity because my investments made a ton. No, it seems to only be the people on the management side.
Great analogy on the hedge funds. Let me it's not a pivot, it's a it's a great like transition to some news that we skipped earlier. This might not be in Carl's, I keep using this word, I know it's from like the 40s, but bailiwick. But Blue Ridge, it's a third party administration firm that is private equity backed, which is why you made me think of it. They got some cash behind them, or venture cap, no, private equity. And the firm behind them is Levine Leachman Capital Partners, and they've been buying up third-party administrators. By the way, I get emails from them. I've actually talked back and forth to one of the people representing them. They want to buy my firm. They've bought firms larger than mine, firms smaller than mine, and they have bought. I don't actually know what it stands for, so I'm going to say it in Greek.
Economic Group Pension Services.
EGPS. Thanks, chap.
I got you, JD.
Which cuts close to home because I'm down here in San Diego, and they're very big down here, but they're a national firm. By the way, it's 7,500 plans or 7,200 plans or something like that. So I mean,
doubled the size of Blue Ridge.
Pretty big. And they have sold to Blue Ridge, which is again backed by private equity. How much did this deal go down for? You know, I like to talk numbers. You know, my firm, we were transparent on the last show. I think our last fiscal year we did about 5.2 million in revenue. And I think people want to buy me all the time for 15 or 20 million. And I'm not going to go there and do that. So let's apply that to this one. Okay. These guys are 7 times my size, right? Like they've got 7,500 plans. Their plans are slightly bigger than mine. That their average client has 68 participants or just north of 2 million in assets. Mine's more like 35 or 40 and 1.5 million in assets. And they've obviously got a lot more. So I'm guessing at their revenue, but I'm thinking it's like somewhere in this 30 to 40 million kind of range. Again, completely guessing here. And so let's just simplify it. If you could get 3 times revenue for your company, which I think it's, someone tell me in the chat bar that I'm wrong. I think that's a conservative number for a third-party administration firm that has this reoccurring revenue, especially if it's bigger. And yes, thank you, Kevin. They've been buying up smaller third-party administrators. Yeah. This deal could be anywhere between 90 and 120 million. And who benefits from this? It's funny you're hearing this from the drunk guy who's drank 4 tall boy Guinnesses and is thinking about going straight to the bottle of Grey Goose. This is privately owned. This is my understanding. This is owned by the executives and the top people at the company. So why is this happening? My take is this is people cashing out. And what I want to ask you guys now, and maybe even I think it's fair for Justin's sister to chime in if he wants to. He doesn't have to. Is this, we always hear these news releases that this is we're doing this because they're going to help us grow and they're going to infuse money and capital and whatever. I'm saying bullshit. This is, and good for you. You were founded in 1971, EGPS, and now you're getting paid, and your executives are getting paid, or the people that have put money into to own this thing and making some money. So is this infusion of cash and capital and a merger to go on to do bigger things, or is this a paycheck for people that deserve it to finally like cash in?
I mean, I'll chime in first. I obviously don't know the answer to that, JD, but when I look at what Blue Ridge has already done, they've acquired some really stable, really smart, very good third-party administrator shops in the last 5 years.
They look through a filter.
They do. Like I threw out a couple of names when we were talking via text as a group. You've got Sliders team and TSC. I don't know if that's actually an acronym. I said I was going clean tonight. I'm going to assume it's not. Coastal Pension Services, Pam Walker. Like these are big names. These were good, well-established shops that went the Blue Ridge route, and now they are the executives already in Blue Ridge. So when I think about economic group pension services being acquired, and I think about the payday for the people like you're referencing, I don't see how they fit into the structure and operations of Blue Ridge. I think that
that's a classic. That's Chad.
That's
a classic. Sorry, that's a classic question to ask. Is how does this move on in terms of structure?
No, so
Sorry,
you're talking
Justin.
about. Go ahead, Jess.
No, I just asked. I thought JD was going that route too. But so you're saying for EGPS, it was a payday because they don't have room to grow up there.
I'm saying that the press release of this is going to give us access and tools and growth out, like JD was referencing. When I look at that, I go, it doesn't feel that way with this
it's always that way. Isn't that such bullshit? Like, there's moments, there's times in the world where, and Carl, I'd love your opinion at this point of like, hey, I need money. Like, I think I got a pretty good business. It's flowing really well. I've got a good sales team, et cetera, et cetera. I'm speaking from my own mind and like, God, if I only had, $10 million, I could really like hit other regions and do this and that. But the most of this shit when the press releases come out, and these are small deals, Carl, we're not talking about like, these are in our little world. This is, yeah, of course, you've been doing this for 50 years. You need an exit plan. You need to fucking get paid on what you built. So why do we stick in this bullshit narrative of like, oh yes, this is for the greater of the company?
Because
just
you know why.
You know
exactly why. You know exactly why. Because there's 7,300 clients. There's 7,300 clients that have to land and stay with Blue Ridge so that the payout takes full form.
All right.
So you've got to go in, you've got to button up relationships, you've got to tell everybody nothing changed in our business. We're going to continue to service our clients well. That's why that's the press release versus peace, bitches, I made my money.
Yeah.
When
there's probably
PDC
an earnout provision over a 1 to 3 year period built into the
there's all kinds
built
of
into the
details.
sale price.
Stock too, I'm sure. Well, they're not a public trade company, but like no, like stock in their company as well. I'm sure the private equity firm isn't just handing them cash.
There's something very meta about stock in Blue Ridge, right? Like an employer stock ownership plan of a company that sells employer stock ownership plans.
Yeah. Hackler liked that joke. That was good, Carl. I got news for you. If I ever sell out to Blue Ridge, Chad,
that's your press release.
My press release is gonna be like, JD just bought 5 fucking Lambos in a rainbow color.
Yeah. It'll be Carlson makes terrible decision and buys Lambo dealership with earnings from company sale.
Do you mean that all 5 of the Lambos would have the colors of the rainbow, or do you mean that each Lambo is a separate color and together they appear to be a rainbow?
Carl, I would park them in the front driveway in the rainbow.
There's 6 colors in the rainbow.
Yeah,
I think there's 7. Roy G. Biff.
Let me ask you what's next, JD. You've got Blue Ridge.
No one called me out on Roy G. Biff.
Wake up, sis.
Sorry, what?
Blue Ridge just grew to, let's call it, close to 20,000 plans. What happens next for them? What's the logical? We saw it with Future Plan. We've seen it with a few others that have gotten to this scale.
I asked Chat GPT the same question, and I couldn't get a good answer. I honestly don't know, Chad. Like, and it's not. Can we be clear? It's not what does Blue Ridge want to do. It's what does Levine Leachman Capital Partners want to do. And so I'd imagine if I'm Levine Leachman Capital Partners, which by the way, if you go to their website, they own like fucking a gazillion companies in all different types of sectors. And I'm thinking, let's put ourselves in their shoes, shall we, everyone? What do they want? What's their goal? Is their goal to, oh God, I'm getting soapboxy here. I apologize. Is their goal to like make the U.S. retirement system better?
No.
I don't think so. Yeah, their goal is pretty straightforward, everybody.
When you're in that kind of mix of investment companies, your goal is to make money. You're not interested in the retirement plan system. Now, could they look at it though and say we're not ready to sell to the
Of
chat
course.
bar's point, and they can look and say, we've got a record keeping arm we can build out. We can get into asset management.
Of course. Of course. But to Carl's earlier comments on just private equity in general, like they're trying to invest money for their investors and and their pool of money, so that they're trying to make a gain. And so I would imagine their goal is to accumulate all these small companies, in myself included, like all these tiny little companies. I mean, where do you think we're at, Chad? Like, how many billions of dollars? 1.5, 2 billion? How many? I have no idea. Like our AUM. Oh, fuck. I stepped into that one.
Oh, you're talking to us. No.
They're looking to acquire all this shit
$1 million.
and then package it up, and then someone else comes along that's bigger. It's like a small fish, medium fish, big fish kind of thing, and they keep making this money. And Carl described it really well earlier in terms of like the vicious circle of these rich people making money and kind of the shell game that's happening. So that's clearly what's supposed to happen is they want to continue to have Blue Ridge buy other firms and get bigger until someone wants to buy it for another price, and that someone thinks they're going to do something with it. So I think that's good for all of us in this industry to understand and pay attention to. And I want to move on because we're doing, as I said, we would a longer show here, but I think that's totally okay. I'm not the private equity, the third party administration firm that's been working for 50 plus years. They were founded when I was born. So, excuse me, 55 years. I just had my birthday in April. And they do need an exit plan at some point. Like they've worked really hard to have 7,500 plans, and they should get paid, and they should also continue on somehow if that's really a thing. So I'm not against this. I think it's a good thing. But let's all put on our spectacles. God, I love the old school.
One last question though. Someone's excited about buying a third party administrator with 7,000 plans. Is there anybody that really wants to buy a third party administrator only shop with 20,000 plans?
20,000?
Yeah.
Oh.
Who's buying that? Who?
Fuck yeah. Big people. Go ahead, Carl.
Right. I mean, isn't the idea that there's probably going to be some attempt to monetize their client base and try to sell them or provide additional stuff or just jack up rates? I mean,
or increase profit margins with tax.
But you're not increasing profit margins on the compliance side. That was my point of, do they push into asset management or record keeping? Yes, JD. I don't.
You could do a worse job.
You could do a worse job. I just look at the sweet spot for acquiring a compliance only shop, and I don't see where an Empower, a Voya, these groups that have acquired record keeping partners of 30, 40, 50,000 plans. I don't see their interest in a compliance only at 20.
Well, I wanted to move on and do some stupid shit, but you mentioned this in our chat, our text message. Future Plan was doing this, and they clearly had a goal to bring them all together. So I think you're actually underestimating the value of an administration firm's client base. I think that Future Plan fucked it up. When they first came to market and said, we're not bringing them to our own record keeping system, I was shocked. I was like, why would you not buy all these firms and then bring them on your own record keeping system? Like, that seems crazy. I think that was a mistake. We had the president and CEO of them on the show years back. He made some loose comments about that being a mistake. So I feel like, Chad, maybe the next person's not that stupid. Like, we'll buy all you, bring you all in, and then we'll convert you all over onto our platform. It's not even a pillage.
It is. It's a pillage because all of those plans were sold with partners. So
yeah, but Chad, that's fair. But Chad, are you ready for this? if you're Joe Schmo who runs a small business, and this is what these acquisitions are about. These are small companies with 62 people talking about EGPS. That vodka tastes so good. They don't know the difference between record keeper, administrator, advisor, whatever. They'll go along in the acquisition with whatever. So someone's trying to, and then there's Carl's concept of like, and then there's this whole other thing of, oh, well, we're gonna monetize them in the new modern world. Like we're gonna sell them fucking goddamn car insurance or something. Like who knows what they're gonna do? Look at the Chatbar Champion thing going. Apparently, I need to vibe in on this. There's a battle. It's
I'm still going to make my joke.
Faith.
I'm pretty sure that discrimination testing is DEI and frowned upon now. So like you can save a lot of money that way.
I'll drink for
Just don't do it.
All right, let's finish.
Because it has the word discrimination in it, which makes it sound like it's, progressive.
It's yeah.
That's good. I actually want to expand on that. I like that, Carl. Let's play. Not play. Yeah. Let's do our new segment to close it out. Okay, everyone. Then you can go on to your Thursday night. I got friends that want to meet me down at the bar with my wife.
Wait, JD? Can I jump in? I want to get one public service announcement out right now, which is that part of the reason I wanted to come on and talk about the DOL regulation is. Department of Labor proposed regulation is because, we're in the comment period now that shuts off June 1st.
Yes.
I think anybody who has thoughts about it from your own perspective, even if it's a basic paragraph explaining what you think, even if it's things you like, strongly encourage people to submit comments. Also,
okay, Carl,
if you have questions for me, I'd be happy to help. See Engstrom at engstromly.com.
I'm going to finish this bottle and I'm going to go comment to the.
I'm done. Spiel done.
No, that's good. I love that.
No, that's
You're
good,
right.
Carl. That needed to be said.
Apparently they have
absolutely
over
right.
20,000 comments already, but and then I know this is your who's Superman's anti guy, Lex Luthor. You're Superman and Daniel Aronowitz is Lex Luthor, but he actually said to everyone too at a recent conference, like, hey, come on. We want your feedback. We want to know what you want us to do.
Well,
don't shake your head.
The industry's feedback,
Yeah.
right? And he solicited comments from them. I mean, and have they ever been funding the bad study machine? If you dig into the citations and that proposed regulations, it's some of the worst financial scholarship I have ever seen. There are so many things in there. Oh, weird. There's a 2024 study. It turns out that litigation has caused menus to shrink, and in fact, people are losing 2% a year.
Everyone, we have a headline announcement right now. Carl Engstrom will be on Retireholics every month for the rest of 2026. Let's go real quick, Brandon. Close it out with a little fin talk fun. And we'll all right, Carl.
I felt like Michael B. Jordan in Sinners there right then.
When I get so high up, I don't have to look at professional. I always use lowercase, never have a subject line, and I always have many spelling errors. Chad, sometimes when I'm, as the chief executive officer of the company, I'm writing an email to someone, I'm just like, you know what? I don't have the fucking time to make sure that this fucking thing is spelled right or what's
it does it for you. So don't say it's a time thing.
It really
it's you just
doesn't.
bucking the system.
It really doesn't. You and Carl, I'm feeling very stressed these days. 5 years ago, I was a surfer. I ran a company that did well. I put my feet up. I had a great life. And now I'm in 2 other companies. And one of them is an artificial intelligence company, Waves.ai. I'll drink. Mm-hmm. And I'm very busy all the time. I've got a lot of work shit. And it sucks, but it's fun, but it sucks, but it's not fun. And I feel like this guy, which is, I run this fucking company. I'm about to write you an email. I don't have time to do this shit. You just take it the way I send it to you. And Chad, sometimes my keystrokes and whatever's happening, spell check doesn't work. It doesn't know what the fuck I'm writing. Like I
That's
fucked
fair.
up.
So when you
And I
spill
gotta get-
vodka on your keyboard,
Yes.
starts
That can
fucking shit
happen.
up.
Can
That
I,
can happen.
JD, can I offer you a few tips? Like this,
Please.
I mean, of
Please.
course, yes, writing in all
Please.
lower caps, taking 3 hours to 3 hours, 3 days to respond to emails. I mean, I would think
3
that's like
hours.
entry level. Here's next level, okay, which is someone submits some work product to you. This is done now. I like firing off 5 comments. Each of them is a separate entry in Slack. And you need to do this. And then they ask, wait, did you even read it? And I say, no, of course I haven't read it. Like, I just know those are the things I'm going to think. So giving feedback without reading the work product, that's baller.
Oh god damn, I love Carl. Look at he just took me and he raised it way up as he should.
I mean, JD, you
I
own
mean-
an AI company. Can't you just have it respond to your emails for you?
That's my dream, Justin. I will. I'm working on products right now for the 401k industry, but eventually I'm going to apply it to my own fucking inbox and do that shit. Yeah. Brandon, let's play the next one from the beautiful interwebs.
I work from the moment I wake up to the moment I go to bed, and I work 7 days a week. When I'm not working, I'm thinking about working. And when I'm working, I'm working.
Clearly, you guys are getting an inside look at my algorithm.
Oh.
Carl, you know who that is, right? Do you know who that is? I'm slurring.
I think so.
Carl? That's the fucking CEO founder of NVIDIA, bro.
Wow.
Get your shit together. Jesus
Okay, that was not who I thought it was, so I didn't
gotta
know
be
either.
honest, that comes across as very neurotypical to me. As an attention deficit and hyperactivity
Is that
disorder
a schism?
sufferer, I do some of my best work while
Schism?
I'm playing games on my phone, or best thinking.
It's good. Chad, I'm gonna you've had a pass with this. So I'm gonna go to you, and we're gonna have one more, we're gonna end the night. Hardcore head down working to
Mhm.
accomplish a goal, achieve something, help people. Like this guy just said, someone asked him about his work-life balance, and he basically said, "Fuck you. I work, bro, nonstop." You've done this in your life. I think it was to support your family, get things set up. Tell me about how you feel about this.
Well, I felt like it was a necessity at that point in time, and it was a necessity to give me the opportunity that I have now to go to my kids' ball games on weeknights and leave work early to go play golf tomorrow. and
Have
shit
a
like
golf simulator in your home office.
that. Absolutely. But that was a point in time where I didn't have kids and I could put my head down, or kids were young and I could put my head down and I could work it. And I still do it now. I just break it up differently. I start work at 5 a.m. and I'll pull away at 3:30 if I need
Well,
to.
I mean, if you don't keep your head down, it's not going to be a pure ball strike.
This is very true, Carl. You got to stay down and
Lose
through.
the distance, accuracy, all of a
Down
sudden
and
you got to
through.
slice.
Carl, I was on the range today before I went surfing, and I had that exact same swing thought. Thank you very much for doing that. Brandon, let's play one more. Right? We got one more. What do you think about that, Carl? You end us out, Carl. What do you think about that? Good answer. Good answer. Okay, everyone. Thank you for tuning in.
I'm just thinking about I'm just thinking about hit 'em up. That has to be a top 5 diss song of all time.
Yeah.
Oh,
absolutely.
God, yes.
Absolutely.
God, yes. Oh,
it might
my
be
Lord.
top 1.
Yeah.
Got him killed. Maybe. No. Yeah.
Right. That's what I mean.
He's not dead, JD.
Yeah, it's like Nas and Jay-Z are doing just fine. I mean, but then again, I do love Ether. But can you beat it back? I don't know. Kendrick. Then again, Kendrick Lamar
that was good. Yep.
It's
climbing levels there.
And that's certainly the most profitable diss song ever.
Great takes.
The fact that Kendrick Lamar was able to do his diss track on the national stage in which he did was pretty fucking phenomenal.
Was it that Drake didn't want to sue him for defamation because it would he would lose street cred? Instead, he sued all of the publishers or the streamers?
Ed DiMarino. Don't leave yet. Are you still here, Ed?
Finish us, JD. I gotta pee.
We're out. I do too. And I've got friends waiting for me. Ed, stay here for a second. Down at the local little bar restaurant. They wanted to meet with my wife and I at 6 West Coast time, and they have no idea what's showing up in terms of me. I'm pre-game.
You mean which color Lambo?
Coming in hot?
No, not which color Lambo. I'm just saying, yeah, I'm fucking. I drank 4 of these motherfuckers. Thank you, everyone, for tuning into another episode of Retireholics. We are changing the retirement plan industry one beer at a time, and we love having fired up plaintiffs' attorneys on our shows. And thank you, Carl Instrom, for showing up for your 3rd appearance. I love it when you ramble. I love it when you talk and go on.
Teach.
And I'm not even kidding. I want more of that. So we'll see. I
didn't even get to like 70% of my content that I prepared.
Oh my God. Can you call me later, Carl? Let's just do it.
No.
Like 6 hours. You and me on the phone.
It's fine.
And thank you to you out there, Silent J, and everything you contributed to the show tonight, Silent. I felt like you were on your fucking game tonight.
Just saying everything.
Brandon, can you put up one of Chad's images one more time before we head out?
I'm good without those. Totally good without those. I'm wearing a red jacket next time.
I don't know if the Chatbar Champion. Whoa, Webby, stop! Webby, stop! I don't know if the Chatbar Champion worked properly, but
it did.
It seemed
Kevin should have won. Okay. Moody started off strong. Kevin should have won.
Tonight's champion is Kevin Spaeth for our new Chatbar Champion model. And we will carry this into the next show. And Kevin, if you tune into the next show, we'll let you know what your gift is. It's going to be a brand new beard from the beard that you had shaved off at a recent 401k event. You didn't know I do that, huh? I pay attention to everything. I'm like the goddamn 401k matrix. That's what the fuck I am. And you. Oh, I forgot. Almost forgot about you. The audience. Thank you so much for tuning into another episode of Retireholics. Brandon, let's play some fucking punk rock music or whatever you got queued up to send us out of here. We'll see you next time. Yeah, that's
good night, all.
Prince is punk. Okay. See you later, Carl.
No, this is